Good evening, everybody. Our first live stock market brief show. Now I'm live on YouTube. It's a great thing. All right, we're going to get right into it today. See some people coming in. If you're not live, you can always rewatch this show. It's going to be recorded. Today we got quite a bit to talk about. We're going to talk about energy's performance and what it can mean for the market. Some signals that are flipping, as you can see from the thumbnail. We're going to get into quarter to date, month to date, weekly EMs for SPX and various gamma levels here too as well. We'll close off with a couple of trade ideas and then I'll try to answer some questions in the chat or some various tickers that you may want me to pull up on today's show. So we're going to get right into the first chart of the day. And the chart is the heat map of the S&P 500. Now, the reason why I brought up energy was because if you look over here, energy on the heat map perspective, these are the names that have been doing quite well from a relative standpoint. And this means something very specific to the market. Now, overall, what held the most weight today in the S&P 500? Google. Google was up 2.79%. And you saw a lot of red on the screen overall. Now, the reason why I want to hop into energy is looking at this specific, where you can look at cycles and you can look at sectors and how the sectors perform within these cycles. And you have the blue, which is more the economic cycle, and then the orange, which is the stock market cycle. And without getting too deep into this, I just want you to see that towards tops, you can have energy as the top performer. Now, the S&P 500 has been on this massive rip. And the reason why I'm re-bringing this up, as we did in 2021 going into 2022, is because energy has been making a very strong stance. Now, the reason why it's typically marks tops, you can see very clearly here on this specific chart, one that we have shared a few times on the stock market brief show. Now, this chart right here is energy relative to the S&P 500. So this means that if this line goes up, which it's currently doing, that means energy is outperforming the S&P 500. The SPX is below us, and what you'll see here is while the energy is outperforming the S&P 500, you actually typically have underperformance in the S&P 500 from a relative standpoint, from an absolute standpoint as well. So you see this big move here in the relative performance, and then you see that 10% drawdown that we had in 2023. This is actually currently where we ended up getting much more bullish. And now the stock market's been on a monster rip. And what I find interesting here is that we're starting to see the relative performance of energy outperform the S&P 500 for now, just over a month or so, pretty much. Yeah, I would say just about a month, maybe a little bit longer. And the S&P 500 still continues to just, no pullbacks at all, and really no consolidation. And where it gets a little bit more interesting, we'll continue on. Not just energy, but what's correlated to energy and what that means for the markets. So if I take a look at WTIC, so this is crude oil, you can see here, this is energy, and beneath us is the correlative state, the 90-day correlation. I'm using the 90-day. You can go smaller. I just did 3-month. You'll notice that the correlation between oil and energy is a very high correlation, right? So this zero line means that there is no correlation. When it's above zero, there's a positive correlation. When it's below zero, there's a negative correlation. And you can see the majority of the time, there's a few hiccups, right? The majority of the time, there's a positively correlated state. So that would say that if energy goes up, energy stocks will perform well. Or if energy goes up, you'll typically see at the same time energy or oil going up there too as well, which we're currently seeing that big breakout in XLE, I'm using as the proxy, but other various energy names there too as well. But it goes a little bit deeper. Let's look at the 10-year yield, right? The Fed is trying to fight off inflation, but yet we're seeing the market price yields higher. So is inflation here to stay? Is it sticky? Well, I guess we'll be finding out, right? So we've got that whole bump in the road situation or scenario that Jerome Powell talked about on the last meeting, but we'll get into that here momentarily. So take a look at oil and the 10-year yield, and this is oil relative to the 10-year yield on a 90-day correlation. And what you'll notice here too, it spends a lot of its time in a positively correlated state, which means what? You'll see, right? If oil's going down, the 10-year yield's typically going down. If oil's rising, the 10-year yield's typically rising. Well, and you see that still here. So not only do we have a strong correlative state in oil, but you also have to, in energy, you have to look at the 10-year yield, which is one of the more important assets from an intermarket perspective. And if we look at just the absolute perspective of the 10-year yield, you'll see today was a massive day in the 10-year yield. It was up 2.92%. We closed at 43.29, so 4.32% on the 10-year yield. And it looks like it's, cresting to break a high of 2024. And this is interesting to me because when the 10-year yield has been falling off from October into 2024, it also fell off with the dollar. And if you look at the S&P 500 during that time where they were falling in October, we found a bottom. So not only did the S&P 500 go up higher, all right, that was on the back of a falling 10-year yield. And what we're seeing right now is a rising 10-year yield, but the correlative state between that and the S&P 500 have not mattered nearly as much, at least yet. So I'm starting to bring in the energy relationship, the 10-year yield relationship, and really starting to kind of hone in here how it could become dangerous, but when it becomes dangerous, it could be quick and it could be aggressive from the looks of this from an intramarket standpoint. When I'm looking at the S&P 500 on the daily time frame, really just this chart is pointing out the negative divergences that are forming. They're still forming, right? We've seen them plenty of times form here in 2021 going into 2022, that bear market. We've seen the negative divergence here before the 10% correction. And we have another one where the RSI is really coiling up here as the S&P 500 has just been a one-way ticket up. Now, if we take a look at the dollar, right, the dollar we said it fell too as well in October. So we had a falling dollar, falling yield, and we saw an S&P 500 that really ripped, and it's still continuing to rip. But what do we have going on now with the dollar? The dollar just crested into new high territory for 2024. So yeah, if you look back to the left of the chart, it's been going sideways, but it made a huge impact when it fell like this in the S&P 500, as you can see. Boom. Okay, when the dollar fell, that was at the same time. But now where the dollar is moving higher, and this could put pressure on assets like gold, which gold hit another all-time high today, but then it fell off from those highs. But it can also put in a hit to the S&P 500, which it just has not done yet. So those correlations have just not really mattered yet. If I look at the correlative state of the S&P 500 and the dollar to get a little bit more, granular, you'll look at 15-day, 30-day, 90-day, 120, and 180, and you'll see the bulk of the time is in negative territory, right? So the other ones we were talking about positive correlations. Well, now if you look at a 15-day, 30-day, 90-day, 120, 180, the majority of its time is spent in a negative correlative state. But what we're seeing here on the short term, right? You'll notice as the S&P 500 has been moving up with the dollar, it was negative, and then they started to creep back up both from the 15-day. Now it's a strong positive correlation, which you can see here. It does that every once in a while, but then ends up turning back around. So if there's one bet I can make, it's going to go back to a negative state at some point. And then we look at the correlated state between the S&P 500 and the dollar on the 30-day time frame, and there is no correlation right there. As it stands from a 30-day perspective, it's at the zero line, slightly positive, but zero. And then you can see that the correlated state between the 90s has been upticking here too as well. Now, there are a couple signals that are flipping. This was the thumbnail that I shared. This is the old full indicator, and this is utilizing a couple of indicators here. And, it's a lagging indicator, but it's been proven to be quite instrumental in changes in trends. And what we're seeing here is the NASDAQ composite divided into the put to call ratio, the total put to call ratio. And that's that purple line, right? It gets really choppy. So to ease out that chop, you can use a moving average. So we use the 21 and the 50, and the 21 and the 50 smooth that out, and you could look for crossovers. So the last crossover was right over here. That was a bullish crossover, and that was into November, basically on this gap up. And that identified the potential change in trend to the upside. Now, the last sell signal over here was back in August of 2023, and you can see the market fell off a little bit, and then it rebounded quite a bit, but the trend continued down. This is what typically happens in a negative gamma environment. You can get face-ripping rallies, but then you can get the price actually selling, but get into selling in those cases. Now, the reason I'm bringing it up now is because we recently just had a bearish crossover, and we haven't had one. The last bearish crossover that we've had wasn't since August. Now, if I go back further, because some people want to see, well, show me more of the data. I mean, you can pull it up yourself and look at more data too. But the buy signal prior to that, it was very choppy in here. So it's right around in this range where the S&P 500 in 2023 went sideways. Okay, and then it started crossing over, and we saw that nice big rally into that 10% correction. And then the last sell signal was over, one prior to that was right over here where we saw a little bit more sell side, but like I said, it was a lot of whipsawing and choppiness. And then a very clear buy signal was over here, and then that led to a nice little rally there before going into its next sell signal. So that's some more data on the old full indicator. There's another interesting one that I want to talk about. And this is the sailor to shift tool. The sailor to shift tool is mapping the rate of change, the 4-week rate of change between Bitcoin and gold. And I said I'd be bringing this up if we start crossing below the 0 line, which tells me that the rate of change between Bitcoin and gold is going into negative territory. And that is exactly what is taking place right now. Now, the week has to close below here, and it's Monday. We have a long time till the week closes, especially the week weekly candle for Bitcoin. So just be aware that if we close into negative territory, that is the quote unquote sell signal, but not a trigger. The trigger would mean that when this week closes on Bitcoin, the price action, the following week would have to cross under the low of that week, and that would initiate sell signal, sell trigger. And we've seen throughout history that it's caught every big sell-off. It's many whipsaws, but it's caught every big sell-off. And you can go back even further and look at it. I did more data analysis on this on the specific video for this indicator. The last signal that we got was the buy signal, and it's been ripping, right? We had that quick sell signal, sell trigger whipsaw right over here. And then we had a clean signal right there too. So it's caught this entire move for the most part. Since September of 2023. And now it's something just to be aware of. It very well be just a consolidation whipsaw before we head back up, but it's just worth noting, and I'm bringing that up now as I'm starting to see these signals flipping, things changing around. If we take a look also at high yield, I found this to be interesting today on the live stream. We talked about this in the early morning session. But if I look at the more pure price of HYG where I'm unadjusting it for dividends, and same with SPY, this is the daily time frame. And what you'll notice here is if we look at the correlated state for the 20-day, high yield has a strong correlation with the S&P 500 and strong correlation with the NASDAQ 100 or the Qs. And you'll see here a 20-day correlation. Looking back, it typically spends most of its times in a positive state. And today was an interesting day because we had a pretty severe hit on HYG. It was down almost 1% on the day, and that is a big move for high yield. Now, overall, what are we doing? We're just going sideways, right? We're going sideways. Now, you might look at this and go, well, we had a low, higher low, higher low, higher low, and then we broke. But overall, we are in a range. I just wanted to call that out is because as this has been going sideways, and we're typically in a strong positive state, S&P 500 has been moving up, and you can see that we're still in a relatively high positive correlated state here. So if this continues to find its way down, this could be an indicator telling us that we could see some slowness, some consolidation, a digestion of sorts in the S&P 500. But remember, we're going to have to get more tactical. We're going to have to look at gamma levels. We're going to have to look at the 5-day moving average and see how that's trending before we get way in tune with all of, trying to get too bared up or anything like that. Because right now, it's very bullish. Now, if we take a look at a couple other indicators here, the CNN Fear and Greed Index, they use many different things to compile this indicator. And when it gets up into this realm, it's an extreme greed state. And it's kind of been floating in that area, like between greed and extreme greed for quite some time now as the S&P 500 continues to press up. But you can see other times where it crosses back beneath, we've ran into hiccups and periods of, periods of digestion. So the reason why I'm bringing this up is because if it starts coming off, I mean, don't be shocked if we see this pull back into 5,000, the SPX, or potentially even more, and then go through a longer period of consolidation. As we know, the Fed is trying to fight inflation, get down to 2%. You can look at their balance sheet. They're continuing to drain it. And sometimes when you drain liquidity out of the systems, it can add, it becomes more illiquid. And the more illiquid that a market is, the more volatile that the stock market can be. If we take a look at the Bank Term Funding Program, which was set to expire early March, you can see it's coming off now. And the reason why I'm showing this with the S&P 500, the blue line is the Bank Term Funding Program. This is what they did, what the Fed did when they stepped in during the banking crisis, the one that went away very quickly. But you can see the S&P 500 ignited and took off. And there was a pretty strong correlated state here. So I think it's still worth watching. Because as this liquidity is no longer, right, you can think of it in terms of liquidity or, a backstop or saving. You can see as it went sideways, the S&P 500 went through its contraction, then it went back up and then markets ripped. And now we're obviously coming off because we don't have that support. Another thing you look at is reserve balances, and reserve balances also, right, have been coming off here slightly too as well as the market keeps on kind of just trending higher. So this is totally fine. The markets, they can diverge for a long time, but the reason why I'm calling this out is because if liquidity is going to get pulled, what's going to happen is we're going to run into more volatile times in the overall market. Okay, now I think let's hop into a couple of these charts. I see everyone in the comments section and everything, so happy for you guys to be here. I'll look at some of these comments here momentarily, and then pull up some individual tickers if you'd like me to do that too as well. But let's take a look at the 15-minute time frame for the S&P 500. I'll give you the weekly expected moves for the SPY, but then I'll even get into the SPX, talk about monthly and quarterly expected moves based off of that options implied volatility. So if we take a look here at SPY on the 15-minute time frame, yeah, we saw a little bit of a red today, right? It was down, oh my gosh. But when you look to the left of the screen, what do we see? It's just going sideways, okay? Sideways price action, digesting. Now, what is interesting is the 5-day moving average is starting to flatten out. So we got a flattening out 5-day moving average, but price action's above it. The longer we stay above it, the more positive. But if we start breaking down from that and it starts curling over and actually starts holding, right, then it becomes more bearish. When you get below a 5-day moving average, notice how we've gotten below it many times over here. We've gotten below it, but then what the market does is it gaps up through it typically the next day, but it is still rising during that time. So when it's rising and you're below it, I say bearish, but bearish with caution because you can get those big snapbacks. So there's other elements that we have to add into the process to feel a little bit more confident about going into a larger cash position, or whatever the case may be for your particular style of trading. So the S&P 500 daily expected move going into tomorrow is 524 to the upside. You can screenshot this or you can re-download it, and then 519.99 to the downside. Now we do have a lot of data coming out this week. Sorry, nothing really on the economic. Nothing on the earnings perspective really to be quite honest. So far, the big earnings season kicks off in about 9 days, and that's going to start off with financials. If we take a look at what's on deck, I think the bigger one, right, tomorrow we get some JOLTS number, and that can absolutely move markets. We get ISM services PMI, and we have like a barrage, like 20 plus Fed speakers going on deck coming up this week too as well. The big report is Friday, where we get the jobs data, the non-farm payrolls, and so forth. When I look at the Fed watch tool as it stands right now, we're looking at about a 96% probability they're going to keep the same in the May meeting, so 1 month away. And it looks like they're going to be, it's kind of a coin flip, but it looks like a cut perhaps in June, July. So what happens if the market has to price this out because inflation is getting sticky and it's more than just a bump? Well, the market may get a little bit shaky, right? They have to price things out. All right, let's look at the SPX. This is the SPX on the daily time frame. And I'm just showing you this chart specifically to give you some of the weekly moves, expected moves, and what the options market priced in for the quarter here too as well. So if you want to screenshot this and just have it, just to know these levels, these are based off of what the options market priced in going into this week, this month, and this quarter. You'll see the yellow is the weekly, so 53.13 to the upside, 51.95 to the downside. And then for the monthly, it gets obviously a little bit bigger, 50.96 to the downside, 54.11 to the upside. And you have your quarterly expected moves too for the SPX. All right. I want to hop into now some of the gamma levels that I really want to. I'll start off with this chart before we get into anything else. Now, looking at gamma, what you'll notice here is interesting. So the market, right? We had a little bit of a down day today. It's a new quarter. We could potentially see flows, rotations. We talked about energy and what we're currently seeing there at the beginning of the video. But from an absolute gamma perspective, it looks like traders are still reaching up to that 5,300. So this is going to be the important level. It's going to be hard to break through 5,300 if traders don't continue to reach out. Now, the flip side to this is if you look to the left of the screen, I mean, we got 5250 here, but there's really not much going on beneath us. And that, you know, that brings a little caution, because if the market starts selling off and it starts triggering CTAs, we can have some pretty fast downside convexity. So you need to be aware of that. How do we prepare for that? Okay, how do we prepare for it? Well, we talked about the 5-day moving average. When we get below it and it starts declining, that is one sign. If I pull up the SPX01 chart over here, I'll give some more levels. Bring these back up. Let me get into a different time frame here. There we go. 30 minutes. Yada, 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 yada. Okay. By the way, so this is the 30-minute time frame for SPX. and I'll map out some of these levels. So the gamma flip line right now currently is at 52.30. That could update tomorrow. And you can see today, like, so every day, what I like to do when I'm day trading or just analyzing the markets, we throw up some of these 0-date levels that are showing off in the morning, the larger ones, to give us an idea of the range for the day. So if you watch today's live stream that we did here, during the live stream when price action was around here, we said that it looks like the range is probably going to be, you know, there's a big air pocket between 52.50 to 52.70, but 52.50 down to the gamma flip line of 52.25. And you'll see just by understanding these levels, it gives you a huge advantage, right? So this came all the way down, didn't crest into the gamma flip line to be negative gamma territory, but ripped right back up and found resistance up at that 52.50 level. So these levels are not going to be here tomorrow. They're going to be different, right? So I'm going to update that to the Discord, and then if I can live stream tomorrow, I'll update it there too as well. Okay, but when I'm looking at this now from just various gamma levels, 52.50, we're currently under it. So over here, we talked about 52.50 being under it. So this right here, you want to get back above this and start firing off to 5,300, which was still the original target. And we're just not quite there yet as price action is going sideways. Now, in a positive gamma environment, this is where dealers will buy the dip, sell the rip, buy the dip, sell the rip. So you typically get nice moves to the upside, but slow and drawn out, and volatility suppresses. When we start cresting into negative gamma territory, we can see much more volatile moves. That's where dealers sell into selling, buy into buying. That's just the quick and easy way of really kind of analyzing into that. All right. Let's look to see a couple of different trade setups here. I'll pull up, actually first I'll show you Bookmap. Bookmap had an interesting level that's been building up and around 52.52. After the close today, it dropped off, but I think it could come back. There's like 600 contracts there, and it's been there for multiple weeks. So I think that that's going to be an important level to watch. If it remains there and it shows back up, you know, it's just telling me that people really believe, or traders, whoever that is, but 600 plus contracts, it's very large, believe that that order is going to get filled at some point. So like I said, it's not there right now, but we'll see if it comes back, and look for that level to be an interesting level, potential support or a potential flush point, and then the price action will kind of doodle around, look for a higher high, higher low. 52.50, that's for ESM, okay, ES, so futures. That would be an interesting level. And then let's look into a couple of names that I found interesting, one of them being CHD. This is one that we talked on the live stream that I shared with the Trade Ideas tab too. It was on the tight list, but CHD is in a nice bullish context, right? You have a 20-day rising above a 50-day, rising above a 200, and price action is just coiling up here. And it's looking like it could potentially be breaking out. But regardless of that, I like this most because if it does break out and we get continuation, your risk relative to potential reward is quite nice. So this is one that's on my radar as it stands right now. Another one on the radar is QCOM. I didn't enter into this one, and I may not if the entry doesn't come back. But this one's also in a nice bullish context, breaking out of a series of higher lows and getting tight right here. And then price action really started getting tight right here, and we posted it on this day. And today we're breaking out through the high of that on above more volume than the prior couple of trading days. So that's a positive sign. That opens the door to around, right? We can say this prior high here and potentially even higher if it wants to continue off. So that's Qualcomm. I did find Tesla kind of interesting, so I'll bring up Tesla. I'll hop in my Tesla car too while we're at it. I'll go off script just a little bit here. Tesla has been beaten up all year, all right? And I wanted to call out a couple of things. So Tesla's been beaten up all year, right? We know this. We do have a positive divergence forming on the RSI, so you get a low and a higher low right here. Then price action's been bouncing and resolving to the upside there. Okay, but then if I zoom in even closer, take a look here is what happened. We had this big gap up on news, and it created a shooting star candle, which tells it could be bearish, right? If the shooting star candle happens on a move up and it happens up at the top, it tells us that the move could be potentially over, and it's bears stepping in and pressing price down. Well, we had follow through to the downside. Now, the flip side to that is now we have a hammer candle, right? This is more bullish, where it shows us price is moving down, but the bulls stepped in right over here, closing a lot higher, and it created a much more smaller candle. Now, is this going to potentially be, if the market starts selling off, or they start taking the big dogs out or rotating into other names that you might see value right now, that have been beaten down. Perhaps Tesla could be one of those. So it's a very, very strict type of play, and I'll show you what I mean, because you got to understand the context of all of this. It's bearish, right? Look at the 200-day, the 50, the 20. It's all trending down. It's lower highs, lower lows. It's bearish. This is bearish. And you can even look here and you can say the structure of this was a bear flag. It broke down and it could be flagging again. It's bearish. But it doesn't mean that you can't trade it for a potential pop up for a few percentage points and get tactical in that way. We're below the 5-day moving average, but it is inclining right now at this time, and we're above the volume point of control for the last 10 days. So if we start breaking above the high of today's candle, which the high was, let's see here, 176.75, then what you do is you put a stop below the low of the day. You'd want to hit the high before hitting the low, and that would be the entry. If it hits the low before hitting the high, well, then you got to give it more time. Then it's a invalidated trade. But if you do play the breakout there, perhaps you can go back for the swing high or potentially even tag into the 50-day, and you can just update your stop loss as you see fit during that time. So that, it's bearish context, could be a bearish pattern, but then also you can look at it in a way like this. You can just say, hey, well, it's, wedging down with a positive divergence, right? I mean, in wedging in neutral context, if you look more out. So that'd be another one that I'm looking at there for a shorter time trade. I'm in the position Dell. This was one we talked about on live streams before YouTube when I was still posting on Twitch, which I'm live there right now. But this one also, I didn't play this breakout specifically here. I waited for it to consolidate, and today we saw some follow through up around 4.85%. I'm looking for it to come back up into this area, right? When you have a strong earnings gap like this, you wait for the digestion, you wait for price to consolidate, and then once it happens, you look for price to tighten up to play a move out of it. And that's kind of what we're seeing here. So I'll be updating my stop probably to the low of this area, maybe even a little tighter, or do like a 50% stop here, 50% stop there. That's just one of the positions that I'm in and kind of how I'm looking at that. All right, I'm seeing some names, some things come in here, so I'll read the chat. Let me hop back over to my tiny camera there. A lot of people coming in here. Good evening, everybody. Let's see here. So you're in Dell too? Oh, nice. Hard, just a troll. It's always funny. YouTube always brings trolls out, and then you look at their profile picture. It's hilarious. It's crazy that like people troll, but yet they're here watching. It's like, dude, go get a life, loser. I don't know what else to say. Okay, let's see here. So is there any names that people want to pull me up? I see IWM. I see TNA. I'll look at IWM, right? So IWM came off today too as well. There's a couple things you can look here for IWM as well. IWM, you have a series of higher lows building into this pivot. We broke out. It's in bullish context. The prior trading day, we had a reversal candle and we're following through. I've traded this from down here up. I tried trading it again. I've had some success, but this right here is just chopped to me. I think that there's a possibility that we could be entering into a better period. You can also look at this as, hey, it's just a rising wedge. Okay, but the volatility in the IWM has been quite insane, at this time. So if I look at the 5-day moving average, price is above it. So that's a positive sign. It came in a little bit. So what you don't want to have happen is you don't want to really start breaking down the lows of these prior days. You can look at this and say, hey, this is an evening star reversal, right? I would prefer to see price action tighten up here and just like reset back up, right? Like it did right here, right? Right here, we talked about it right here. Hey there, Ed. Thanks for this subscribing to the channel. So you can see this consolidation, right? It pulled back and then broke a trend. That was a clear signal right there. Then we consolidated and we moved forward through that level too. So I'd like to see more consolidation, price to tighten up, and then offer up a little bit more of a better risk to reward instead of just entering in blindly as it stands right now. I looked at ARK, and ARK is also looking like it's getting pretty tight here too. I can look at this from a couple of ways, right? So you can look at it like this, it's coiling up. So a breakout could be quite bullish for ARK. If I look at SARK, S-A-R-K, this one's the inverse, right? I'm looking at it this way. And it's the same thing, right? You look at things in inverse and you can say, hey, well, yeah, if it starts breaking out, that means ARK is breaking down and it looks like it could be a bullish breakout. So I think that we just got to be patient with these various areas of consolidation on these various names. I'll pull up a couple more names here before I call it quits on today's stream. And then I'll be back. I'll try to be back tomorrow. If not, I'll be back the following day on Wednesday. Cybertruck. All right. So I see CVX. Yeah, CVX is pretty positive, right? So CVX was another one that we discussed, breaking out of this consolidation. And also it got pretty tight here and broke out, and we're seeing some follow through. So this looks good to me. It looks really good. Does it mean that you want to enter right here where it's at? Maybe. It depends on your size of position and how long you plan on holding it. But the first thing that I would consider is, hey, if you're entering here, where's your stop? All right, where's your stop? Probably ideally there, maybe there if you're trying to give it much more room for a much larger run. What I like to do personally is I like to wait, even if it goes up higher, I look for price action to get much tighter, and then I'll probably try to play the breakout. Now, to disclose this, breakouts, from what I've noticed, they work a lot better, right, in individual names. Let me go back here. When we're in positive gamma territory and when we're above a rising 5-day moving average. And let me just tell you right now, we're not far off from negative gamma territory, and we're not far off from getting below and declining this 5-day moving average. So when that happens, what you'll notice with me is I typically start getting positions whacked out, and I don't really start to add much more. If I find a good setup, I'll add a little bit or smaller positions, and that'll help me keep my P&L curve to where it's at. The real skill in all of this, right, is not catching what we just previously witnessed, this S&P 500 rally. Let me pull it up here. This, if you caught this move, you're saying, yeah, I'm so smart for catching that. You'll be mistaken if all of a sudden you catch a huge move to the downside if stuff were to start coming off, or we go through another 10% correction or 5% correction. The real skill involved in this is to protect your capital on an actual downside move. And we just haven't seen that since October. So everything that you're seeing out there in the Twitter space, X space, whatever the case is, people making all this money, they haven't been tested yet. They really haven't been tested at all since October of last year. Okay, I'll pull up a couple more here that I'm seeing come in. Bros. Yeah, Bros I like. Bros came through on a Holy Grail scan. One of the traders in the community, Trader Joe, brought this one up too. But you'll see here it's on a rising 20-day, and you can see it's actually flagging or wedging right here. So as it stands right now, if you were to play this from the Holy Grail standpoint, if you don't know what the Holy Grail is, you can watch my YouTube short. It's a 60-second video explaining that strategy. The strategy is based off a book called Street Smarts from the 1990s from Linda Rashiki. Once you break the high of this candle, which we did, you technically would be in, and your stop loss would be below the low of this candle right here. And then you play it into the prior swing high. So we're technically still within that area, but if we start breaking down the low, it has to be restructured and wait for a new setup. So I do like the looks of this one, and I like how it's consolidating. But now I want to see it break back through these highs right over here, right? This little pocket of candles. Meta is back testing this little trend that it broke out, but it's also really just kind of going sideways here. So I think that it's in bullish context. It looks good. So if you are trading this and you wanted to take a stab at it, I'd be very careful if we start breaking down the low of today. All right, and then give it more time, because you can break down the low, it could come back and then set back up again and so forth. But as it stands right now, like I can see the ideal entry, but then if you want the follow through, or if you want to really manage the risk, it'd be below the low of that or a little bit further down. We got AMD. I'll pull up a couple more here. AMD, also another one that I like. This one is floating right around the year-to-date anchored VWAP. So if I pull up the S&P 500 on the daily chart, and I go to AMD, I don't know how to get, I don't want to update right now. No. Okay, let me go back. Okay, so, oops. Okay, wait, what's going on here? I don't want this. Get out of here. Okay, so AMD, I'll kind of reestablish this. I talked about it right about here and we didn't get fully stopped out yet. And you can see this is the anchor VWAP from this prior swing high, and it looks like we came up there and tested it today. That was going to be the area of potential resistance, and it looked like it actually did run into that area as a potential area of resistance. But another important anchor VWAP that I'm looking at is it's sitting here floating on the year-to-date anchored VWAP. So right now it's actually holding up well. It's consolidating here, and if it starts breaking down under this, then it gets a little bit more bearish. But as it stands right now, we're getting some follow through out of this, which leads me to believe that, hey, if we can clear the swing high anchored VWAP, that means the average buyer since this period, since this high, is now in the green based off of that anchor point. The psychology could change here, where you get a little bit more bullish price action to pop up higher. So yeah, we pull back into the year to date. It looks decent. It looks good. Palantir. So Palantir, I think the easy thing to call out, right, is that head and shoulders. Like I think anybody and their mom will see that, right? Head and shoulders breaking the neckline. I'm not going to read too much into that, because if you look at the neckline, if we start crossing really back above it, it kind of negates it, right? So if right now all I'm seeing is a consolidation after a very bullish earnings move, okay? And one way that it will negate it fully is if we break back through the neckline or come back up and break through this prior swing high. So if it is going to hold and we're going to see a series of lower highs, then this could still bounce from where we're kind of at, right? The year-to-date anchored VWAP. If we bounce back up, right, that could be a short-term play there. But keep in mind, the area that it has to test is here. So we bounce up, but then you have to see a higher low. So, okay, are we going to pull back down? Are we going to see that higher low? And then are we eventually going to break the higher high or this higher high to get confirmation that this is no longer really an important pattern from that perspective? The VIX, I don't have my chart here of the VIX yet, but that is one thing. I'll see if I can pull it up. The VIX is, you got to understand, the VIX doesn't calculate like zero date options. So a lot of the volatility, you know, that's why it's been compressing so much, and it's at a very tight point right now. And I checked it earlier, and it was still, once again, contracting like crazy from the weekly time frame. But, you know, not much technical analysis other than that I pretty much do to that. I saw Joaquin asking about GDX. I'll pull up GDX here. So gold miners have been taking off, right? Gold's been taking off. Let me pull this 130 off. I don't need that right there. Gold miners, to me, are incredibly difficult to trade. One of the things that I find interesting about gold miners is that it moves like hand in hand with the price of silver. I share a chart on the market brief pretty frequently of the price of silver moving with the price of gold miners. So if you're bullish silver, I think you can be bullish miners. Now, do you get bullish miners after a move from here to here? Not necessarily. What I'd like to do is see some consolidation. So I'd like to see it consolidate, whatever that might look like, flag out, and then it offers up a better risk to reward. Because if I were to enter here, where am I playing to and where's my stop loss? Is my stop loss down here? Maybe. Where's my, is my reward going to be, for 10 years, 20 years? Is it going to be 1 year? Is it going to be 6 months? Is it going to be 3 days, 5 days, 1 month? I don't know. Well, me personally, I'm more of a, quicker trader. I'll hold things up to like a quarter, right? I don't typically hold through earnings unless if I'm way up in the position. But most of my sweet spot is around the swing tradings, could be 3 days to 10 days. So I like to wait for the price action to get pretty tight and then execute from there. Now that's for trading and swing trading. When it comes to investing, it's obviously a different game. So you really have to understand you have to understand where I'm coming from. And then you have to understand, hey, does that line up with my style? Because a lot of times it doesn't. All right. I see INTC. I'll pull that up really quick. So INTC. This one's actually fighting right now with the year-to-date anchored VWAP. So I'd say and it's already made a strong move up there. So for me, Intel, I would want to see if this can chop a little bit and then potentially break. But right now it's not. I like the look of Qualcomm a little bit better. Right? How it's just break. Like, see how this got, it took down. Like, see, if you entered here, like, oh yeah, it gets so much attention because it makes a big breakout. The reason why I don't like to just trade into that is because I like to look for the consolidation. And it consolidated, and then we broke out, right? Now, is it going to fake us out? Chances are it's highly likely it fakes us out if we go into negative gamma territory and we also go below and start declining that 5-day moving average. But as it stands right now, it's still holding up. Okay. All right, I'm gonna call it off there, everybody. Thanks for joining into the live. This is, like I said, you guys are here for the very first live stock market brief show. It was fun, but I'm gonna cut it there.